Welcome to The Explainer. Today, we are digging into a question that every great venture has to face. Is your amazing idea actually an amazing business? And it turns out there's a specific tool for figuring that out. It's called a feasibility study.
I mean, this is it, right? This is the big, high-stakes question that every single innovator, entrepreneur, and business leader has to answer. Get it right, and you've got a brilliant success. Get it wrong, and you've just got a good story about that one time you almost made it. So how do you actually make that jump? From a concept that feels promising to a decision that you can confidently invest in. How do you separate the truly brilliant ideas from the ones that are just costly failures waiting to happen?
Well, the good news is you don't have to just guess and hope for the best. There's a professional toolkit built for this exact problem. It's called a feasibility study, and you can think of it as a structured, no-nonsense reality check for your big idea. Okay, so let's get into it. What exactly is this tool, and what's it measuring? What are the vital signs it's actually checking for?
The best way to think about it is like a comprehensive health checkup for your business idea. Before you pour in a ton of time, money, and your own energy, you run a full diagnostic to see if it's really strong enough to survive and thrive out there in the real world.
And, it's not just a one-and-done kind of thing. A feasibility study is part of a bigger process. You take a raw idea, you put it through a quick initial screening, then you do a full deep dive, and all of that analysis leads you to that final crucial go or no-go decision.
So the study looks at your idea from a bunch of different angles. You've got technical feasibility, which is basically asking, can we actually build this thing? Do we have the tech and the resources? Then there's economic feasibility, which often looks at community benefits. But for most businesses, let's be real, the place where the rubber really meets the road is financial feasibility.
All right, so let's follow the money. We're going to dive into the heart of the financial analysis and see how the numbers can tell a story. This is really where an idea has to prove its worth.
Now, it is so important to understand the difference between profit and cash. Profit is what you report on your P&L statement, sure, but cash is what you use to pay your bills and keep the lights on. That is why feasibility studies are obsessed with actual cash flow, the real money moving in and out. In this game, profit is important, but trust me, cash is king.
To properly evaluate any project that's going to last a while, you have to get behind one core principle, the time value of money. All it means is that $1 in your hand today is worth more than $1 you'll get next year. Why? Because you could invest today's dollar and earn a return on it. So to compare money across time, we have to discount all those future cash flows to figure out what they're really worth in today's money.
And that brings us to one of the most important metrics in all of finance, net present value, or NPV. It sounds kind of fancy, but it's really just a powerful calculation that answers a very straightforward question.
The question is this: in today's money, after you account for all the costs and that whole time value of money thing, how much total value is this project going to generate? If that number, the NPV, is positive, it means the project is creating value. It's a huge financial green light. So, for example, in this case of buying an apartment, choosing to pay upfront with a discount creates over $18,000 of value today. That discount is just way better than what you'd earn on your savings, so the positive NPV makes it a super clear yes.
So NPV gives us a hard number in today's dollars. But what if we want to see the project's return as a percentage? Well, for that, we turn to our next metric, the internal rate of return, or IRR. And it answers a slightly different, but just as important question.
The IRR basically tells you what's the project's own built-in annual rate of return. You then take that number and compare it to your minimum acceptable rate, what we call a hurdle rate, to make your decision. Simple as that. Is the potential reward worth the risk you're taking?
And this chart just illustrates that decision perfectly. In that apartment example, the project's IRR is over 15%. That blows past the 7% you could get just by leaving your money in a savings account. The project's return is more than double what you require. It is an absolute clear-cut go. But as we all know, projects don't live in a perfect spreadsheet. They live in the real world, where plans can get messy and uncertainty is a given. So we've got to stress test our assumptions. And that is exactly where sensitivity analysis comes in. It's an incredibly powerful what-if tool. It shows you how your project's outcome, its NPV or its IRR, changes if key things like, say, your sales numbers or your costs turn out differently than you expected.
Just take a look at this table. It's showing our project's NPV in a bunch of different scenarios. The base case, right there in the middle, looks pretty good. But Look at the bottom right corner. If our income drops by just 10% and our costs go up by 10%, our NPV turns negative. And just like that, this analysis has pinpointed a critical risk that we absolutely have to manage.
And that really gets to the most crucial point here. A feasibility study isn't about finding a crystal ball or getting one single right answer. Its real value is that it forces you to understand the right questions to ask. It gives you a roadmap, it shines a big spotlight on the biggest risks, and it gives you the confidence to move forward, or maybe the wisdom to walk away.
So that brings us to the final question. And this one's for you. Think about your own great idea. What is the one single massive assumption that the whole thing hinges on? The real takeaway here is to use these tools to find that assumption, to test it, and then you'll know if you're really ready to fly. Thanks for watching.